Hey, is this thing on? Is this thing on? Check, check, check. Stay tuned. We're going to get into a lot of it. We're going to get into a lot of stuff today. We're gonna tackle quite a bit. Interest rates are up. Interest rates are down. Where are interest rates? What's happening in the mortgage business? What's happening in the real estate business? Stick around. Stick around. We're going to get into all of it. Welcome to another episode of That Mortgage Show. Little out of sorts. I got computers. I got 3 computers within reach here. I've got wires. Here's the thing. My trusted partner, Al Butt, isn't here, if you can't tell. And so I don't have any lovely sidekick that I'm going to saw in half today with today's show. But we said we're going to do this every week, so that's what we're going to do. So I'm going to try and hold this mic, record the show at home in the 20 minutes that I have before my wife gets back with 2 of our children. So here goes. It is December 13th. This is That Mortgage Show. This week I had a few people reach out to me, a few past clients reach out and say, hey, is it time to refi? They heard the news last week that interest rates were going down. Perhaps they watched the show and heard us talk about interest rates going down. Well, by Monday, it wasn't a good time to refi, at least for these folks who are sitting at, 6.875, 6.75. The interest rates went down last week. Headline news, interest rates are going down. And this week, the last 5 days, has been anything but that. So really expect volatility for the foreseeable future. I think that we're going to bounce between 6.5% and 7% for quite some time. Hopefully, things start moving and shaking once the new president is in and new policies are enacted and people know where things are going. Rates kind of shot up late this week after there was a day of bond sell-offs. And I don't know if it had to do with inflation. Inflation ticked up. And if you look at it, just at the report that came out this week, it doesn't look like much happened. I think it was like 0.1% tick up in inflation. But if you look at the last 3 months, it's steadily gone up every single time, which isn't a trend that anybody wants to see. I thought inflation was behind us, and so did the Fed. They are expected to cut rate next month, but we'll get into some of the specifics on that in a little bit. So just to give a rate recap of this week, today's conventional rate, perfect credit score, 20% down, sitting about 7.25. The FHA rate for a similar credit score is 5.99, and VA is somewhere around 6%. And what I'm telling my clients right now, a conversation that I'm having frequently is, if you're not putting 20% down, look at FHA regardless of credit score. It used to be, if you are 700 credit or better, conventional is kind of the way to go. Now with lower mortgage insurance and lower interest rates, competitive mortgage insurance as compared to conventional mortgage insurance, FHA's winning in a lot of those instances. So at the very least, compare and take a look, especially if you're 20%, less than 20% down. Less than 20% down, I would bet that 9 times out of 10, FHA is going to be cheaper upfront and monthly if you can stomach the, upfront mortgage insurance. So that kind of gives us an idea of where we are. Now, where are we going? Where are rates going to go? And it really depends on who you ask, honestly. So I wanted to share an article that I read on Forbes. It's a really good article. So headline reads, Mortgage Rates Forecast for 2025. Experts predict how much rates will drop. And my takeaway from the article, one of my biggest takeaways from the article was, experts predicted that rates would drop around 6% by year end due to recent Federal Reserve cuts. However, economic uncertainty driven by inflation and worries and policy expectations for the incoming administration have kept rates elevated. While home buyers may not see rates decline soon, the long-term outlook still points to lower interest rates as inflation pressures ease. So we'll keep our fingers crossed for a steady downward trend over the long haul. But, if you're in the home buying process and you're waiting on those rates, it's going to be painful. It's going to be painful, especially if you're not in process and can't lock, because one day you might be able to lock a half a percentage point lower than the next. So I would suggest just get in while you can. I think you're going to hear that throughout the industry. If you're a real estate agent, loan officer, you're probably saying the same thing. If you're a home buyer and you have a need to buy, I wouldn't wait on rate. Who knows where they're going to be. First, we can look at the average weekly 30-year mortgage interest rate over really the last year. So you can look here. Last year we were mid sixes, and this is just volatility up to 7.25, and then in October you can see it valued at about 6%, and it says as December 12th is 6.6, but that's low. We're closer to 7. Well, mortgage rates drop soon. So, a little excerpt from the article. I'll just read it straight from here. Home buyers hoping for another dip in mortgage rates by the end of the year will likely be disappointed. But the good news is we still expect the long-term trend in rates to be downward as the fight against pandemic-induced inflation comes to an end. Ralph McLaughlin, senior economist at Realtor.com. So Ralph seems to think that the interest rates being elevated or continue to be elevated are due to inflation from the pandemic. So the ripple effect continuing to occur. Here, one last thing from the article, and then we'll move on from it, but mortgage rate predictions for 2024 and 2025. This is from some of the big-time players: Loan Depot, National Association of Home Builders, Fannie Mae, Freddie Mac, Mortgage Brokers Bankers Association, Remax. The Loan Depot, one of the biggest mortgage companies in the country, they believe that mortgage rates could remain above 6% through mid-2025. National Association of Home Builders, 30-year fixed rate to end 2024 in the mid-6 range, drop below 6 by the end of 2025. So fingers crossed the home builders are right. We've got Fannie Mae. Rates will average 6.6 in Q4 and then descend gradually into 2025. That would be cool. According to November Economic Housing and Mortgage Market Outlook, Freddie Mac expects mortgage rates to stay elevated and volatile for the remainder of the year, 2024, and ease gradually throughout 2025. I think that's a pretty conservative view, and it's probably actually kind of accurate. I mean, we're halfway through December, so probably not going to see rates go anywhere through the year. And then, I think they're going to trickle down over 2025. Last one we'll share is Mortgage Bankers Association. MBA economists anticipate rates to stay flat in the first quarter of 2025 and tick down to 6.5 in the second quarter. Nah, I don't like that. I don't like that one bit. I don't want to hear it. Just tell me they're going to be low. So, one thing I've learned over the years reading these things and trying to figure this out, especially like hyper-focused over the last 2 years as I'm just like waiting on rates to come down like everybody. These experts, these people that are writing these things, either they're just like, it's like fluff pieces because they know they don't know what's going to happen. They're just kind of guessing, and there's a million different factors that go into it that affect things. So how can you predict that? So, while I read this stuff and try to stay informed, oftentimes it's, whether it's good news or it's bad, it's like take it with a grain of salt because you don't really know what's going to happen, and nobody does. So again, if you have a want or a need, take action. Get with somebody who is watching this all day, every day, and can lock you in when rates dip, and you can catch a dip. Rates aren't going to go down 2% overnight. It's not going to happen. So work with somebody who is keeping an eye on things. You're in process. Title's happening, processing, appraisal, bang, lock. Hey, we saved you a half a point. We saved you a quarter of a point. Work with somebody that can do that for you. Okay. All right. So we don't know where rates are going, but let's talk real quick about what if they do go down a percentage point. What if they drop a percentage point? What does that mean for you if you're a home buyer, homeowner, and what does it mean for us in the business? What's it mean for the market? How does 1% interest rate change or affect your buying power? So Zillow gets into like the whole, if the rate your payment is based on interest rate. So if interest rate goes down, you'll save. No crap. But one thing they do a really good job of is they kind of give an overview of markets and the average price, and if the rate drops, what you could save. So typical U.S. home, this is really good. A typical U.S. home valued at $346,900, you'd save $182 a month, dropping from 7 to 6%. So, and over 30 years, the difference would save you $65,000 in interest. That's a fun thing, the interest over 30 years. But especially at these elevated rates, it's kind of irrelevant. Nobody's paying on these things for 30 years. They're either selling or refinancing. On average, it happens every 7 years. The buying power boost, if you budgeted about $1,846 a month for your mortgage payment at this about $350 price point, a 1% drop, you could spend $30,000 more on home without increasing your mortgage payment. So now let's look at a couple of markets. So a typical home in San Diego valued at $920,000, a 1% point drop would save you $484 a month. Now we're talking. Typical home in, let's go to the Northeast. Let's go to the AFC North here. A typical home in Pittsburgh valued at $202,000, you'd save $106 a month, going from 7 to 6%. Portland, Oregon. In Portland, Oregon, a typical home valued at $525,000, 7 to 6%. Mortgage interest rate drop would save you $140 a month. So look, if you're in Portland, Oregon, and you're looking at houses right now, and $140 a month isn't going to make or break you, and you want to buy the house, I'd say buy the house, because otherwise you're just waiting for $140 a month. Now, if you were in the high price point, the $900 price point, $500, that moves the needle. It might move the needle for you. But that gives you a good idea of what's going on here. If we drop from 7 to 6, it could really help people. I think the bigger number here is buying power. So if you have a budget and rates drop, your buying power grows. So we know what a 1 point drop in interest rate will do to your payment or your buying power. But what does it do to the market as a whole? Well, we can look at mortgage application data whenever interest rates tick down. And most of the time, it's just typically because of headlines. When those rates tick down, mortgage applications for new home purchases jump. More people in the market as rates go down. That's kind of obvious. I was reading a couple articles, and you can Google this and find the same. There's an estimation out there that a 1% point decrease in mortgage rates can significantly impact the housing market as far as number of households that qualify for home ownership. According to industry experts, for every 1% drop in mortgage rate, approximately 5 million additional households become eligible to purchase a home. Let's see. It doesn't necessarily mean that just because 5 million people now qualify, that 5 million people are going to get into the market. But you can expect that a percentage of those people will. So, let's just say it's 1%. 1% of 5 million is 500,000. 500,000 more people in the market is going to, make things a little different. It doesn't mean there's going to be 500,000 new homes for sale. The inventory's not going to shoot up. So there's going to be a disproportionate amount of people looking to buy, and compared to the amount of houses for sale. And we already have an inventory crisis. So if you're waiting, I don't know what for. Are you waiting for more competition? I made a little chart, so I'll share it. This is like a little graph that I made that just shows as the rates go down from 7 to 4, how many more people are qualified to purchase a home. So, as they go from 7 to 6, 5 million new homeowners have qualified. From 6 to 5, 10 million new homeowners have qualified. And from 5 to 4, 15 million new people eligible to compete with you to buy a house. So keep that in mind. I would definitely keep that in mind. Yeah, so, what should you do? If you're a home buyer, should you wait on rate? If you're looking to refinance, should you do it now or wait? So the refinance piece definitely is I would say more circumstantial than the purchase piece. If you're somebody who has, above 7, yeah, definitely look at refinancing. You could save, I'm saving, I've got an FHA client that's saving $400 a month, going from, the 7s to 599. I've got a VA client going from 7 to 575, and they're saving $300 and something a month. So, it depends on where your rate is. If you have high interest bearing debts and you want to consolidate them, you get the equity to do it. I think there's a benefit to that no matter where the rates are. So, if you're scratching your head on whether you should refi or not, we can have a quick 10-minute conversation and figure it out. If you're looking to buy a house, if you're in the market to buy and you're waiting on rate, I would advise against it. I don't think you're going to see interest rates drop 2% and move your payment by $200-$300 and really change things for you. I think there's more value in paying a premium now and having some leverage in the market versus waiting on rate to save a couple $100, probably less than a couple $100 on payment, and be competing for housing with 10x the amount of buyers. Ask your friends, ask your family, get a good real estate agent, get a good lender, and have the conversations. If you're in the market, have the conversations. Work with somebody who you trust will give you good guidance. Build a good team and let them help you. We would love to help you. We would love to help you. I'd love to help you, whether it's purchase or refi or develop a plan. It doesn't matter if that plan is hey, Adam, we want to offer on this house and we need to get pre-approved right now because we need to make an offer, or if that plan is, hey, I have no idea and I want to buy in the next year. I can help you. If you are looking to refinance or you are scratching your head on whether or not you want to refinance, I can help you. Having the conversation, pointing you in the right direction. We'd love to help. So that's the show this week. I hope you enjoyed it. I hope you get something out of it. I hope you watch it.